Well, I think the key here is Vuitton. The Louis Vuitton brand makes up more than half of LVMH's profit, so it's crucial for their business. Now, Mr. Arnault revealed a slight adjustment yesterday to Vuitton's strategy. They're going to be opening fewer stores, and they're going to continue to increase the amount of precious materials that they use in their products. And you're also going to see fewer logoed goods on shelves. Why are they doing this? Well, it's basically because of Chinese consumers. Their tastes are changing. They're wanting, as has been seen in the US and in Europe, a more conservative product, maybe a little bit more refined product. And so Vuitton, in order to try and keep those customers interested, is going for a sort of even more luxurious positioning.
So the price point will rise. That presumably at some point has got to be good for the margins, or is it going to be offset by the higher raw materials input story?
Well, they've already raised prices at Vuitton by 8%. What was interesting yesterday is Mr. Arnault mentioned that he's slightly concerned about currencies in the year ahead. Although the company is hedged against that, he feels that the yen in particular, there could be problems there, and he anticipated price increases starting in Japan. But obviously, when you're looking on a margin perspective, if a cost of selling a Euro handbag is greater, then that's going to have an effect.
Any sense of how investors are viewing this sector right now? I like to compare it with what's happening with Apple, and the sort of the sensitivity to any kind of miss is really quite incredible. Do you think that's putting people off investing in LVMH, the stock? I'm not talking about the handbags and everything else. Do you think that kind of volatility that we're seeing is starting to unnerve people?
Well, I think it's about stock picking in the luxury sector. I think in the last couple of years, you've pretty much been able to, or investors have pretty much been able to just bank on luxury generally going up. I think 2013, certainly from the analysts I've spoken to, they seem to say that this year investors need to be a little bit more careful with which stocks they're picking. LVMH is a very big luxury brand. It's the biggest luxury company in the world. Vuitton is the biggest leather goods brand. And I think they feel that perhaps Vuitton has reached a maturity now, so its growth is going to be slower, and that obviously has an impact across LVMH. And some analysts see better value in companies which still have room for growth, including PPR, for example.